The only sure things in this world are death and taxes. Now, I'm drawing the line at trying to profit from death. But taxes can be a lucrative business, and not just for the government. Take a look at H&R Block, HRB. That's the nation's largest tax preparation firm with a stock that roared 2.27% today in the wake of last night's better-than-expected quarter. Now, I've liked H&R Block for some time, in part because the company's been trying to sell its banking business, a relatively small division that punishes the whole darn company by subjecting it to government rules about how much money can be returned to you, the shareholders, via dividends and buybacks. Even though this sale has been repeatedly delayed by the regulators, the upside once it happens could still be enormous. H&R Block could then dramatically boost its dividend. It already yields 2.5%, initiate a gigantic buyback. On top of that, though, this company is all about helping consumers wade through the morass of increasingly complex tax regulations to avoid various penalties and fees that have only gotten worse ever since the Affordable Care Act went into full swing. H&R Block just reported results for the latest quarter, included the bulk of tax season, as well as their full 2015 fiscal year. For the quarter, the company delivered a 6-cent earnings beat off a 269 basis, and their full-year earnings were also better than expected, even as their revenues were only in line. We got to talk about that. Tax preparation fees and royalties increased by 2.3%. Do-it-yourself business up 12%. Even though H&R Block actually prepared fewer tax returns than last year, the company offset that by increasing the pricing, controlling costs, and improving efficiency. Can the stock keep climbing like it did today? Let's check in with Bill Cobb, the president and CEO of H&R Block, hear more about the quarter and where his company is headed. Mr. Cobb, welcome back to Mad Money. Good to see you, sir. Have a seat. Thank you.
Thank you.
Well, you're in one of those businesses where this is the quarter, and you have to be happy that you were able to make this much money, even as you not necessarily were able to have as many clients, so to speak.
Yeah, we had a good year. This company had not grown revenue for a number of years. We've now grown it 3 straight years in a row. We had a terrific year in DIY, do-it-yourself, grew double digits in revenue. Our EBITDA margin is, wound up at 31%. To your point about controlling expenses, right. We're about to issue our 211th consecutive dividend in a row. So things are good at H&R Block.
Now, but I know you were let's talk about 2 things that I felt discouraging. One is that you were out front in saying, let me be clear, while we respect the work of the regulators, we are frustrated by this process. They're speaking about the sale of this bank. I mean, obviously, you're not a regulator, and you can't tell the regulators what to do, but it is a little absurd.
Yeah, I use the word frustrated. Okay. We have answered every question. We've been very cooperative. They've been polite. I mean, they're doing their job. Right. Under their pace, it might be rolling along fine, but it's been frustrating. Our investors are frustrated also. We're a little bit stymied, as you said. We now have $1 billion of excess capital on our balance sheet, for a $9 billion market cap company. So we're anxious to get this moving forward. And like I said, I do believe on its merits, this transaction will be approved.
And you're not allowed to borrow $1 billion, right, and to be able to return it that way and then pay it back?
Well, no, because we have capital requirements as a savings and loan holding company, in addition to the capital we have to hold at the bank. So we have way too much capital tied up for a retailer.
All right, let's call it a high-quality problem, though, because that has to be resolved eventually.
Exactly.
In the shareholders' favor.
Well, yes, that is what we want to do. Right. We said yesterday on the call, once this is approved, once we close on the bank, we will immediately be back to our shareholders with the plan.
Even though we have no idea when.
Even though we have no idea when.
Now, the other thing that scared me is we've spent a lot of time on cybersecurity in this company. In our little show hour, we have FireEye, we've had one, and we've had cyber, CyberArk, we've had Palo Alto, and I kept Fortinet. I keep thinking, what are people doing with all those Social Security numbers? Well, to be crystal clear, we believe the shift from assisted do-it-yourself is driven by fraud.
Yes.
Your CFO said that on the call.
Yes.
Millions.
Yes. If you look at the last year that was reported, stolen identity theft, tax fraud. It was up by over 1 million tax returns.
It's incredible.
And all the fraud is done through DIY channels, especially if it's free, because then you can retain anonymity. I am going to Washington on Thursday. I've been working with the IRS commissioner and other industry leaders. We are leading the fight against fraud. We have got to do more as an industry. Our standards on DIY are not even up to online banking. We don't have secure, device ID.
I mean, yeah. I get your Social Security number. I beat you to the filing. I get your check. I mean, that is crazy. This is America.
Exactly. You are then tied up in procedures and paperwork with the IRS. And this has happened. I've talked to other members of the business community. They said, what is going on? I used the word stunning yesterday.
Right.
When the actual results come out. This is a an industry-wide problem. We have come together as an industry. The IRS commissioner is leading the way with other leaders. We have to do more, though, to protect our taxpayers in terms of how they authenticate, who they are, so that people aren't stealing their identity.
Well, Bill, I'm sure some of our viewers had it stolen. What can they do? What can they do to prevent it? And I guess they hire you to help get through it once they've been nailed?
Yeah, they can certainly do that. We came out with a product this year called the Tax Identity Shield, which is a product designed, it's the only product that I know of its kind around tax identity theft. It has a pre-season scan to talk about what threat you're under.
Right.
We actually have a notification if someone has filed your taxes. We'll do restoration services. I highly recommend it, and I think it's a terrific product for us. We launched it in January.
One last thing, Affordable Care Act. Obviously, people are paying this penalty. The penalty goes up really big next year. I mean, this is like the government's kind of running amok and then also not helping you, right?
Well, the penalty does increase almost double next year in terms of for the tax penalty, but you also have more people enrolled in the exchanges. Documentation requirements will go up next year. They were a little light this year in the first year. We spent a lot of money on training, and we actually, I think, did a great job positioning ourselves as the experts in terms of the intersection of healthcare and taxes.
But you didn't get the rush that you thought you would in terms of...
Yeah, well, what happened was, we have said all along, the multi-year problem, issue, it's going to roll out. Little shorter than we thought in year one, and I think it was due to the documentation requirements not being very stringent.
Right.
They increase next year.
And people are going to get nailed if they don't use, right?
Well, hopefully, we're going to help them not get nailed,
Right.
Jim.
Well, I mean, I'd like it so that someone else doesn't get my tax return
It's a scary
I thought it was really
proposition.
scary. I thought that the call was scary, that stuff's happening. Without any, the government should be talking about it every day. That's Bill Cobb, the president and CEO of H&R Block. I hope you win in Washington, because this is insanity.
Yeah.
I mean, millions of people being hacked. That's what they're getting.
I mean,
that's what they want.
Yep.
Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.